There's more to it than you say. Your words don't match what you display. There's more to it than you say. Your words don't match what you display.
All right, guys, what's going on? What's good? What's good? I hope you guys are having a blessed day. I hope this weekend was blessed as well. It's been a pretty good day today, I must say. That's why it's Don't Miss Out Monday, because I always see people who post on Twitter and they go, I'm not going to trade on Monday. All right. Well, I'm going to go make some money because that's what traders do. So I don't fucking know about everybody else, but that's what we're going to do here. What we're going to try to do. Know what I'm saying? Those $98 contracts are right now at 185. 185. So that is a gain of 88%, 89% in a couple hours. But you want to miss out. The gooberism is real. The gooberism is real. I don't know. It just doesn't make sense to me. It don't make sense literally. Literally. But, oh well. It is what it is. Doesn't make sense when other people steal your shit and don't give you credit either. But, you know, I don't know how many times I'm going to bring it up. We'll find out. But what's good? Beverly, Willow, Naruto, Matteo from Italy, Edgar, Sean 2020, Andreas, Lucas, Marius, Zay, Nikki, Eli, and Maximiliano. Welcome, everyone. We are, by the way, Ibranith, what up? By the way, we are at all-time highs for SMS members at 121. I think that's how it was on Friday too. And there hasn't been a lot of change, but yeah, we are 4 away from our next goal of 125. So I might have to do another giveaway. We're gonna have to see. And I did 4 last week, and everyone should have either their book or the gift card. I did send gift cards because a lot of people that won ended up being outside the US. So I just sent you gift cards for the most part. Because I think Sean's from Canada. And I don't remember where the others are from. But, you know, it's cool. It's cool. So what we'll do is we'll discuss the indices today, both Dow and Nasdaq, and then I guess we'll briefly look at S&P as well. But the S&P, like, this is what I was saying earlier in the Discord. How, what was it, 9:15, 9:20, when I was, I don't remember what time I posted about them, but I know I posted some charts, and then I mentioned that the S&P was stuck between equal highs and equal lows. So I really didn't want to do anything in here with S&P. I didn't want to do this. Just looks horrible to me, like horrible. And I wasn't willing to trade it. But what did I just show you? The micros? Yeah. Nasdaq, I was definitely willing to trade on the future side. I mean, excuse me, on the option side. The futures I ended up breaking even on, and then I was like, all right, fuck this. And then what were the options? So there is that. Was good, Alex? Oh, most of you guys are blue or green. Anyways. What do you guys remember from Friday of last week? What we discussed just before the weekend? And then like the market closed, and then like 10 minutes later I was like, oh, that's why we're not moving, because we had ended up closing. What did we talk about Friday? Yeah, that's the saying, Willow. If I'm blue, if I was green, I would die. You know, that's the joke. Anyway, moving on. What did we talk about on Friday? Who remembers? To be honest, I don't want to watch the options anymore, because now they're just gonna fly and I'm not part of them anymore. I'd rather not, but I do want to keep up with it, just in case we double up, just in case we hit 100%. That'd be cool. Then that would be cool. Norto says Nasdaq had equal/low resistant highs as a potential target, but indices were mixed, so the timing may have been off, then closed essentially. That is part of it, yes. Lucas says low resistance and high resistance. Well, yeah, so low resistant highs, low resistant lows. And in my opinion, these to me are low resistant highs, but we did get there, in my opinion, in a manner of high resistant highs. And so the way I described it to you guys is that a low resistant highs or lows, the price will get there in a more smooth fashion, right? Smooth sailing is basically what I had said. And high resistant highs or high resistant lows is like rough seas. It'll get there, but it's going to be very give and take, very back and forth. And that's how, to me, that's how we delivered today. Is I think it was Lee Bright who posted this as well, and this was the same trade that I took, actually, was the 2-minute imbalance here. It was one of these candles in here. I don't remember which candle specifically, but I know it was one of these in here. And this, okay, is the low risk buy. Okay, right here. What makes that the low risk buy? All right, excluding the Dow for a minute and excluding the S&P, if we just take Nasdaq by itself, we already had 16,054 on our charts from Friday. We already had that. That was there. We didn't need to wake up to a fresh chart this morning and go, where's the market going to go? We already knew where it was going to go Friday, or at least had an idea of what it could reach for. But then the market closed, so then you got to wait till Monday. Congrats, it's Monday. So here we are, right? If the market shows a willingness to go higher, then, you know, that's tradable, in my opinion. I know they were very mixed, and I'm going to touch on that in a minute, but for sake of price action, let me just explain this. Pre-market low, 15,976, and London's low right there. Boop. Okay, so, you know, and I keep bringing this up because honestly, Twitter to me is just, it's ridiculous. This one, I forgot who it was. Not that I would mention them by name anyway, but they said that stop runs are deep, and I said, no, the fuck they're not. You can write that down. John said, no, the fuck they're not, because that's right here. That's only like 1 point. That's not a deep run, but you know what? That's still a stop run. Okay, it's allowed to be shallow. All right, and I won't throw in my normal joke in there, but it's allowed to be shallow. Okay, you're not allowed to be shallow, but the market is allowed to have shallow runs. Okay, that's that. Runs both of those trades higher. Okay, so if we have liquidity, yeah, thank you, Willow, for finishing that sentence for me. I just feel like it's getting a little old. You guys are probably tired of it. Be like, all right, John, we fucking get it, bro. We get it. We understand. All your exes are ridiculous. It's fine. It's fine. The market moves from what to what? Liquidity to liquidity. So if we have a downside, well, I wouldn't say objective. I wasn't really looking for that specifically. I was just waiting, to be honest. We ran higher, okay, but don't take the highs. We traded lower, took the lows, okay? And then we created an imbalance on the way higher, okay? I gave you an imbalance model months ago. I gave it to you. What do we wait for? An imbalance. OTW. OTW. On the way. On the way. Simple as that. It's an imbalance on the way to liquidity. Right there. There you have it. Okay? So what does it do at 850? What's it doing right here? It trades to the lower end of it, and you might think, I don't know, Chief. I don't know. But then look at that close right there, dude. Wow. That's not bad. This is an imbalance. Is it in a premium or is it in a discount? Is it in a premium or a discount? If our target is up here, 16,054. Okay? We just took liquidity 15, I don't know what that low is. 15,970 and a quarter. Okay. Well, between this low, I mean, honestly, it doesn't really matter how you look at it, whichever measurement, because it's going to be fucking discount either way. But if we measure that high and this low, that's obviously a discount. If we measure even this low up to liquidity, that's obviously a discount. It doesn't matter how you look at it. That's a discount in any measurement. In any measurement, that is a discount. Okay? Now, let's say you don't measure ranges. John, I don't use the fib tool. I don't use the GAN box. The GAN box 50% that you introduced in 2018. I know. It's been a minute, but let's say you don't use that. Ooh, that's hard to see because that purple box is there, but there's your 50% right there. That imbalance is in a discount. Yeah, John, but you know, I'm lazy, bro. I need an indicator. All right. Well, I gave you that years ago too. New York Stock Exchange opening price 15,999. Where's that imbalance? Below the stock exchange open. That is a discount. I'd rather have you work for it, but you know, I'm gonna help you out too. That's why I had the indicator made. So this right here is the best of both worlds. It's an imbalance created on the way to liquidity, after liquidity was swept, below stock exchange open, and in a discount market. What else do you need? What else do you need? Now, this is the part that I don't like. Ooh, pulling back a little bit. This is the part that I don't like, okay? If we just go down to the 1 minute time frame for a minute. Earlier this year, we hyper focused on mitigation model over and over and over. Every fucking day I was showing you the mitigation model to some degree or another. Then I don't know what was after that, but in recent times, the last 3 weeks, maybe month or two, I don't know, I've been showing you the what? The inverted imbalance. And what is the exact way that I taught you? What was the way? It was an imbalance that gets respected to some degree or another, but then gets traded through and then revisited. So, you know, it's kind of, I fucking hate this verbiage, but you know, it's old resistance turns support. Okay. That's the easiest way to explain it. Don't roast me for saying that, but that's essentially how, you know, it's looked at. Nikki's banned. You're banned. You're banned. The only retest is in college or in middle school. If you fail a test, you got to retake it. That's a retest. You know what I'm saying? I had a couple of those in my lifetime. We're going to move on from that. But this idea is we had a bearish imbalance to go lower. Okay? That's actually what I shorted on the future side. And then I looked at it and I went, oh shit, that's not okay. So then I went break even. And then obviously, like the very next move, I'm out. I'm like, okay, fine, it's cool. I'm in a long. We trade through this imbalance. It actually revisits that right here too. But what's the difference between, because some of you might have this question. I already know what question you're going to ask before you ask it, so you don't need to ask. I got you, my friend. I've been doing this shit a long fucking time. Okay. You might look at that and go, well, John, it traded through that there, but then hit it here. Like, is that the buy or is this the buy? Well, to be honest with you, I didn't like either one of those, in all fairness. And I was going to trade this and I was like, nah, I'm not going to do it because I had already did everything in this movement here. Okay. So the difference between this right here and this one, what do you think is the difference? I want you to look at this chart. What do you think the difference is, my friend? Before I tell you. What do you think the difference is? Oh, Baby Pips is with grandma today. Nice. Very nice. AKA the free babysitter. You know what I'm saying? You gotta love it. Hey fam, that's why they say it takes a village, man. It takes a village, you know? Yikes, Nikki. Yikes. That's all I have to say about that. The second time has a confluence with an imbalance that formed on the way up. Says Naruto. Lucas says the one that touched an imbalance. Yes. Yes. That is the only difference that personal opinion, that's the only difference that I see. And the charts are going to get a little bit colorful because we have a lot to mark up. But yes, that to me is the only difference there. Okay. Now, I didn't look at this until now. I am still going to point it out to you because I do want to give you some value. And then we're going to go to live price because I do want to have any potential outlines for the PM session because we're here. If I haven't shown you enough already in the last 25 minutes, this is really cool to me too. When you study price delivery, okay, now granted it came all the way back down to this level before trading up here. And again, that's why I'm saying to me, it was high resistance today because we made that new high and then deep retracement. We made a new high 3 times and then came back again for like another deep retracement before running the highs. So to me, that was very sloppy. Just very, ugh. And we're going to discuss why in just a minute as well. But look at this. We've discussed this idea before of price delivery. And there's actually another, like an inversion right here. So there's like a inversion that overlaps with the previous inversion. And that's trippy. Like the Matrix, but it's okay. Anyway, when we talk about price delivery, right? What's interesting to me is this candle here. That 924 candle. Because I know I've been over this. This isn't new to you, right? But I just want you to look at this. Look at the responsiveness here. When price at 924, it comes down, right? To the lower end of what? Both the imbalance created on the way up. You guys can see that, right? And I keep forgetting my face is on there too. This imbalance, okay, was created on the way up. This previous imbalance was bearish, okay, and it trades to the lower end of the inverted imbalance, right? But look at the next 2 candles. Think back to your, or refer back to your notes, think back to when we talked about price delivery. When it shifts from bullish to bearish or bearish to bullish. Here's your down candle. Did you notice that? There's your down candle. Fractal low. Institutional candles and fractals. I wonder how long you've known about that. This up candle was traded through at 925. That candle opens at 926. What's it trade down into? The open of that last down candle. The candle that completed the... Man, this is a hard sentence. It completes the imbalance and inverse imbalance. We shift from bearish to bullish at 925 at the close of that candle. Boom. Then it trades down into the last down candle. That is a shift right here. That is a shift in price delivery. Touches that right there. It's that old gap too. And then gets sent. Boom. And this is what I don't like about today. Okay? Because if you really look at it, that was very responsive and we made a new high. So that would be a partial right there. But that's so close to the equal highs, I would have probably said, man, fuck that. We're going to grab the highs. And then it's like, okay. Trades all the way back down into that a second time. And like that, to me, I don't like that. But let me tell you what happened. And I posted this in the Discord. You're more than welcome to look at it. Because I looked at it afterwards and I went, oh shit. Well, that's what you get for not looking at the triple screen. And which I introduced that as well earlier this year. Not that that's not mine or anything. That's Alexander Elder. But the 15-minute, although this looks like absolute garbage, the formation is still the same in terms of a mitigation. Because remember, we talked about this being manipulation, right? Manipulation at the open. We trade lower. Grab stops. How far can price go below lows? There's an imbalance right here. Okay. That right there. That's correct. Low, high, lower low. That takes stops, trades through that. What's the high probability target? These highs. That's the mitigation model right there. But wait, John, wait. I know that the mitigation model has an imbalance. And that's in the video. It is. But we didn't really have one on the way up. We didn't have one on the way up. But there is one right there. Now, this 830, that's some, to me, that's just some bullshit. It's manipulation. But there is a inverse imbalance inside the mitigation, which also ends up being, again, that inverse 1 minute imbalance here. And then it just stretches over into this. Did you guys see that? Now this, I'm gonna be honest, this is some complicated shit, okay? I ain't gonna lie to you. I don't like when the market does these kinds of things. Now, I still made money today, and obviously you can still make money too, I would hope. I can't promise that. But if you are the kind to set and forget, today would have been really easy for you. Because you would have longed somewhere lower, and you would have forgot about it. You wouldn't have moved your stop to break even. You would have just let that, trade open, and then bam, it runs to your TP only in a couple hours. But yeah, that's cake to me. And then triple Q's no different. No different. There's your open. We trade higher, grab stops, slam lower, grab those stops, rally. There's that same 2 minute imbalance right there. Boom. So these contracts were $100 a piece. Well, the one that I showed you in the Discord, I added it when it was at 98. So I got it, I screenshotted it a little bit below 98. But even if, again, you got a bad entry, $1, okay, you paid $100. You paid $100. Right now, even after pulling back some, it's selling right now for 154, 155. It's fluctuating. But that's a 50% gain, bro, from here. But let me talk to you for a minute. You're going, wait, hold on, John. Wait. You're telling me it was $100 a contract and it's only up $58 a contract. Well, that's a terrible risk reward. Well, you're right. But that's if you hold to expiry, my friend. The low, let me tell you the low real quick. 836. The low was 89. So right here. Well, I mean, time decay probably would have went down to like 85 for a stop loss, but just bear with me here, okay? That low contracts were at $89. So what I'm saying is that one is 100, but your stop can be at 89. That's only $11 of risk. 11 fucking dollars. How much you put in your gas tank? How much you spend on Uber Eats? A lot more than $11. Okay, especially if I showed you my history at the taco truck. You don't want to see that. That's $11 of risk, and it's up $60 right now. So $11 to make 60. Now at one point it was up, the highest it was up today was 91. So at the very height of today, which was actually only a few minutes ago, you would have been risking $11 to make 91. That's risk reward per contract. So $11 of risk per contract. So you might think $11, John, that's fucking nothing. Right. So you can buy like 4, 5, 10, however many you want. Because if that's a true, well, not the true imbalance, that if this is a imbalance that's going to be respected, it shouldn't trade to this low. It never gets close. So it's not like you're risking $100 a contract. I'm risking like 11, maybe 12 or 13 at the most. But yeah, that's that. And then, like I said, right here, the highest that it was traded at was like 91. So you contracts almost doubled at the height of this move here. So yeah, that's pretty cool, in my opinion. Pretty cool. So anyway, let's talk about why it did this shit. Like, why does it make a new high, deep retracement? That's like a 618. Makes a new high and then like a really deep retracement again, and then finally runs these highs on the triple Q side, which is Wednesday's high up here. Because if we were to take a look at this and then take a look at Dow, you see a difference there? Right, Edgar. That's my point. But it's the same shit, but inverted now. We had this monstrosity at the open, just mega move higher to take the highs. And then, okay, well, if the market moves from liquidity to liquidity, then if we took liquidity on the upside, what do you think it's going to do? Trade lower. So here, and again, this is just my personal opinion, but this is why, to me, as soon as the Nasdaq starts to trade higher, it gets sent right back lower again. Because look at the Dow. It goes higher, lower, makes a high, lower, low, and then just before it runs the 35,327 level, it trades higher one more time to grab that high, and then during lunch trades below the lows. So if you were looking at the 15-minute, and I talked about this in the Discord beforehand, we have lows and highs. When price is in the middle, that's low probability, right? What has the answer always been to that? The answer has always been you wait for one side to be taken and then see if there's a willingness to trade to the other. You see that here. When price is in the middle, well, this is actually slightly lower, to be honest, but the open is, I guess, about right there. That's kind of near 50%. It's in the middle, it's in the middle. But I don't know if it's going to go lower to grab the lows or if it's going to go higher to grab the highs. I don't know. I don't know. If anything, the S&P has some higher highs or some equal highs that it could reach for today. But the Dow, these large, well, like 15-minute, 1 hour, those lows, I couldn't justify longing Dow. Couldn't do it. But I could justify longing Nasdaq because it swept short-term lows and had highs open. So yes, we do see that today where Dow is trading lower and lower. At the same time, Nasdaq is trading higher and higher. So that is confusing for some people. And trust me, sometimes it gets confusing for me too, okay? I know sometimes it looks like I'm the perfect trader, but I'm not, all right? I'm not. But you do see repeating ideas presented over and over again. So if you're worried about consistency, just stick around for a while. Stick around long enough. So if you got value so far out of today's stream, drop a like and let me know. Drop a like and let me know. Long Dow out of the 15-minute imbalance before the open, was busy working and lost half the RR by the time I closed. Should have been paying attention to the well, we got to look at Dow. That's fucking Nasdaq. Well, my question is, you didn't set a TP at the highs? Because I'm assuming you longed that. You said pre-market, right? Before, yeah, before the open, that was here. So you longed this, right? Before the open. No, I'm just asking, bro. I'm just asking, like, you didn't set a TP or at least a partial? I'm not trying to clan you, bro. Shit, if anything, you got bigger balls than me longing before they open. That's crazy. Not me. I wait for the open, bro. I wait. All right, Cameron. Well, you live and you learn, my friend. You live and you learn. And it did hit 450 as well. I just noticed that. If you're studying price, there's a 50 level right there. How far can price go above highs? An imbalance. Do we have one? Not really. So then what do you use? 50 level right there. Not bad. But yeah, that's why I always wait, bro. I almost never trade before the open. And if I do, I mean, who even needs an energy drink, to be honest? You know? Didn't expect it to spike up there so fast. Yeah, if you look at the 1 minute time frame today, I watched the 1 minute and the 5 minute. Like I was cycling through. And yeah, that shit was crazy. 8:30, boom, one candle came all the way up there. It was pretty cool. But I was watching it to go lower, and I actually called this out to a good friend of mine. I was like, the Dow's about to dump. But that was like right in here. That was, matter of fact, I went back and looked at the time, and that was like right here. So I told him right at 9:24, I was like, the Dow's gonna take a shit. Excuse my language, but that's what I said. I said this is what the Dow's gonna do. And then it rallies into this imbalance. I'm like, okay, from here it's gonna dump. and then it goes whoop, and I'm about to text him. I told you so. I told you so. And then it's like, it comes back up, and then it trades lower, and then like right here, I'm like, okay, I told you so. I told you so. And then it goes up to sweep this high, and I go, all right, bro, I'm about to go have lunch. Like, this is, come on, man. And then it finally trades lower, and then I go, I told you so. Markets aren't hard, dude. They're not hard. And I think, honestly, people keep telling me I should run a signal service, bro, but I still would rather have you learn this for yourself. Because knowing me, shit, it wouldn't have been enough. I would have said, oh, watch for this high to be swept, short above the high, run for the low, and then it wouldn't have done that. So that's probably what would happen. And then you would have never got filled, and then it went to our target, and you'd be fucking mad. So honestly, I'd rather have you find your own entry. To be fair. Lucas asks, more questions from Lucas. We got to start writing those down. We really do. Like, Lucas, do you write down your questions and the answers? Because that would be a phenomenal gem if you were able to drop that in the Discord. I feel like there's an FAQ page we have, and that would be a really good place for that if you feel like sharing. But if not, if you don't have it, then it's fine too. But let me get to your question. Can an old imbalance that was already completed, that was already completely filled the first time and the market rejected it to be started again? I'm fucking lost, bro. And be started as an inverted imbalance and bring about the reaction from the market? Well, Lucas, I am totally lost on, it's like Alice in Wonderland right now. We're all over the place, and I'm not understanding the question, bro. That is a multi part question. It's already completed for the first time, and the market rejected it to be started again. Yeah, bro, I don't understand the question. It was completely filled the first time, and the market rejected it to be started again and be started as an inverted imbalance. Yeah, I'm confused, bro. I'm confused. Willow had to go get the kid. Oh, well, you missed it, bro. We shorted the S&P up here, and we're all in profit. And you missed it, Willow. You missed it. We waited for you to leave, and then we called out this short. But I'm just kidding, bro. I would not short the S&P today because of same idea from Friday. We have these highs up here. We have consolidation here. We have these highs at 45.74. I think that could be on the upside for today. I would have been more confident if the S&P actually ran any of these stops, because it doesn't run London's low the same way Nasdaq did. So I guess that would be accumulation, because Nasdaq ran the low, S&P didn't. So that could be an upside target. But honestly, I think I'm just done for the day. I don't think I'm going to press any more buttons. That would suck though, right, Willow? That would suck. You're like, oh my God. But no, I didn't call anything. One of the hardest parts in trading is actually being patient and waiting for price to come to your area of interest. Oh yeah. Well, you take trades and get in too early enough times, you take drawdown enough times, you're gonna be like, all right, bro, this shit's getting old. This shit's getting old. Then you start waiting for better entries. If an imbalance is not respected initially, can it still be considered an inverted imbalance? Yes, but I think there's got to be some confluence because, like here, for example, with what I showed you a minute ago, you have this mitigation, right? And I pointed out to you that there's an imbalance here, like inverted, right? But that's why I said like the 8:30 opening, that's just manipulation. It's just bullshit. I'm not saying to erase this candle, but if you just ignore it, okay? If you just straight up ignore that candle and it trades through it here, it trades back into it right there, right? But it doesn't respect it first. Like, let me draw this out for you. You would think an imbalance on the way lower would be somehow respected and then traded through back into it to go higher. That's essentially what I taught you, right? Is that, oh, it was, you know, it showed a reaction previously. Then it went through it. And then that previous imbalance that was bearish now becomes bullish. It doesn't do that here because it just rips through that at the open, manipulation, and then it trades through it here back into it at 9:15. It just happens to revisit that again at 10 o'clock. And in either case, it respected that. So if you think about it, both of these, right? This imbalance here is inside that larger time frame mitigation. That is also the mitigation model, which you learned like 6 months ago, 7 months ago. You don't need the inverse. You could have dropped down to you could have said, all right, 15-minute mitigation after 9:30. Okay, well, what's it going to trade into? I don't know. There's an imbalance right here, but that's above it. There's an imbalance that's already been traded into. But there's one more thing. There's one more thing. Oh, wait, John, now I see it. Now I see it. Do you? There's a lack of wick right there, my friend. It's right there. We'll just keep it gray. There's a lack of wick right there at 9:30. What did we do last week? Remember we broke down hour by hour? Yeah. Or it might have been the week before. I don't remember. But we broke down hour by hour, right? 8:30 to 9:30 is that first hour. 9:30, 9:35, okay? That opening at 9:30 has no downside price delivery. So it comes back for that. Inside the mitigation. Price gets sent higher. I just wasn't watching all 30 things I just went over at one time. It's a lot of shit. You try keeping up with that, bro. Live price, you know, managing a trade, taking partials, having somebody hit you up on Instagram, you know, it's a lot of shit. So I don't watch everything at one time, but it's all there. So hopefully that answers your question. It doesn't have to like initially be, it doesn't have to give that initial reaction. Okay. To me, it's just better if it does. Like down here. Okay. This one, if we just take everything off, that's why I posted in the Discord, because this right here is what set the tone, in my opinion. It's right there. It showed a reaction, traded through it, came back to respect it. Look at the bodies. Okay. And that to me is beautiful. Buy low, sell high. Simple. Simple. So yeah, hopefully that helps. That's the best I can do. What is the significance of 20, 40, 60, 80 level? I don't know where you got 40 and 60 from, but zeros, 20s, 50s, and 80s is some people call them psychological levels, some people call them institutional price levels. I just call them whole numbers, bro. I mean, there are, to be honest, both might be correct. Psychological and institutional, who cares? But the context is that price does business around those whole numbers. Okay, look at 16,000. Did you notice that today? 16,000 is right there. Boom. Look what price does here. How many times did price trade around that? Quite a bit. Quite a bit. Okay. If you look at the 80 levels, now it's not going to be perfect, but 15,980. How many times has that has price seen significance there? What about 16,020? Is there any sensitivity there? You bet your ass. Right there. What about that 50 level? 16,050 right there. How many times is price traded around that? Well, we're pretty much right there again. Close to it. So, and there's another 80 level up here too, which price has done some business around. But now, do you see the significance, Jada? That's an easy question, bro, because you can see it on your chart. I put this in my book too. Although I think I mentioned New Zealand dollar and Australian dollar, but this is what I showed you in my book as well. So yeah, there's a lot of business and commerce done around 80s, zeros, 20s, and 50s. And you can see that. That book came out, oh my God, March of 2021. Quarters theory came out fucking way before that. That's been there. And I mean, I think they are worth noting. But you guys already know. How many times have I brought up, zeros, 20s, 50s, and 80s? From time to time. But I don't always harp on it. I'm not always like, yeah, this, that, and a third whole numbers. But you can see even today there's some significance. And there's manipulation around those levels. But a lot of the business, a lot of the transactions are done near those levels. Man, we might not trade higher, bro. Oh, well. There's no... I'll keep my face intact. If we... it's almost 1 o'clock. If we get acceleration to the downside, it might trade below these morning's lows. Or this morning's lows. But right now, where are we at? We're in the middle. We have lows down here. And we have highs up here. I don't know. Could go either way. And we're kind of near that 50%. Do you see that? Do you see that? So we're in between both. I don't know. I feel like if I bought it, it's going to rip ass. And I feel like if I short it, it's going to fly up to those highs that we thought on Friday. So I don't want to take that trade. That's not a trade I'm willing to take. I don't want to get back into my profits either. You know what I mean? So I'm gonna just let this one go, to be fair. I mean, we can watch it. Let me see. I don't know. This to me is kind of a stretch. That's kind of a stretch in my opinion. Imbalance on the way lower. We traded into that multiple times to go lower, but now we're through that and then back into it. So that might be an inverse, but I don't know. I don't feel right about it. You know, I just don't feel right about it. Plus, that was created on Sunday too. Ugh. I don't know if I trust that. I don't know if I trust it. There's no mitigation for me to look at. This is just not something I want to deal with today. You been long since 45.51. 45.51. Oh shit. Blessed. Anyway, what news events do you pay particular attention to at Forex Factory? Pretty much everything with a red folder. Orange sometimes, I guess, but I usually only have the filter of the red folder news. CPI, PPI, any Jerome Powell speech, cash rate for any of the currencies, like the overnight rate, whatever, unemployment rate, FOMC. Meeting minutes probably as well. So pretty much just red folder. I don't care about the other shit. The other stuff. Sorry, I'm trying to work on that. Anyways, any other questions? We've been here almost an hour. I felt like you guys got some juice today. Felt like you got some juice today. What else you got for me? What else you got? You learned a little bit about options. You learned a little bit about, you know, getting fire entries. I know Libright did. You learned about setting TP, right? Before you enter a trade, you always need three things. Your entry, well, duh, you're entering a trade. You know your entry. But you also need that stop loss. You also need that TP every time. Every single time. Not financial advice, though. But you should know what the plan is. Like, for example, I shit you not, we live trade like to a certain extent, but I promise you, in my journal, I have this here. I wrote down, I'm going to short this. If it trades above it, I'm not going to let it hit my stop. I'm going to close out, and then I'm going to long it. I shit you not, it's in there. Because that's how I look at imbalances. If it doesn't, I mean, it worked, and then I was like, oh shit. I looked at the other indices, saw what's going on. I'm like, nah, we still have those highs up here. Like, nah, I'm just gonna go break even. If that didn't happen, if I let it hit my stop, I'd say, okay, now I'm gonna long up to those highs, and then I probably would have got in on this. Or if I didn't, I would have got in at that down candle here and then taken partials and probably broke even. Or I probably would have got my loss back and then just took a break even on the day. But that's probably what is likely that would have happened. Or if I didn't do any of that, there's a small chance I might have got in at this last imbalance before that final push. But that, to me, I would have debated that because the risk reward now isn't worth it. So I would have maybe debated on that. But I'm saying, like, I have an idea on what's going to happen, or I have an idea on what I think should happen. If it doesn't happen, I have a plan for it. Either I'm going to get back in, or I'm going to switch my bias, or I'm going to walk away. but it's systematic. Like I already know going into it, okay, it should do this. If it doesn't do that, then it's going to do this instead. You know, to whatever degree. But that's today though. Okay. So hopefully that doesn't confuse a lot of people with that. In order to be an inverted imbalance, we have to see first a reaction from the price and then a breakthrough. Alex, it doesn't have to be. It doesn't have to be. But this is why you should study these things. You have to study imbalances and inverse imbalances or inversion imbalance or whatever you fancy name you want to call it. I don't care. But not just one time frame. You need multiple time frames. And this is why I showed you. And like, go look at the Discord. Look at what I post in the Discord. You see 1 minute inverted imbalance inside of the 15-minute mitigation. I'm showing you these things on purpose. Sometimes I mark up just one time frame and it is what it is. But today I marked up, or at least I showed you multiple time frame analysis. But you're going to get more by studying the market than you are from me. Okay? Do you think the earth is round or flat? I don't know, man. I stay at my house all day, so I wouldn't know. Never fucking looked. Never bothered to look, Willow. But I have been out on the middle of the ocean. And at some point, there is a horizon. At some point, you see a ship just get further and further away till you can't see it no more. So I'm guessing it's round. But don't get the Flat Earth Society up in here. We don't want those people in here, bro. We don't want them in here. We'll take anybody else. Well, that and the KKK. We don't want them in here either. But any other students are welcome. But yeah, flat earthers, nah, man. No. Go back to Twitter with that. Stay on Twitter with that. Win is a win, though. I agree. Are this retail and support and resistance lines? What are you talking about, George? What are you talking about? Those lines I just had up on here a minute ago? George. Why is everybody trolling me today? Why is Naruto, you're gone. You're gone. George, you're gone too. Y'all can go join Willow and Beverly in the land of the band. Y'all just love being banished, bro. I don't get that. I don't understand. See, Cameron, that's what I like, bro. Give us something to work with here. Give us something to work with. Cameron's over here trying to find trade ideas. You guys over here bullshitting. You guys are crazy, man. You guys are crazy. Here's the problem I have with Euro. I like the price action here, but I don't like the speed. We traded lower to grab the lows, and then we spent all of New York until the last 1 hour or so. We spent all this time here. Only the last hour we've been finally rallying. But you might be right. We can get get like 9 pips out of this from here. Like 5 with spread. Yuck. But to this day, I still don't know who created Choach. Change of character. That is absolutely the dumbest shit I have ever heard. As if the market has character. Really? The market has a conscience and learns personal development? People, man. People, bro. Just do the weirdest shit. Weirdest shit. Anyway, moving on. Edgar asked, or said, I would tell you that Swissy has beautiful highs, but I didn't want you to see how the price is moving right now. Oh, we're going to take a look at it, Edgar. We got to take a look now. Marius, you're in EU longs? That's not bad. That's not bad at all. I mean, if you're already long, yeah, shit. That's not bad. I don't know. You're probably up like what, 15, 10, 15 pips or something like that. I'm tired already, dude. Huh. But yeah, this to me is, we spent so much time there, dude. I don't like that. But I still think it's a good trade, though. I don't know where you're in, but I think it's a good trade. And honestly, if we take the highs, we might as well take 60. Might as well take that high. But yeah, one of these is London's high. This one. So yeah, if we take the equal highs and London's high, shit, it might as well grab that high right there. It might as well. Oh yeah, you said Swissy. Look at that, and then we'll probably hop off. Okay. You know what? I did look at this earlier, and this is the problem I had. Because we talked about this last week. There's nothing over here that would make me feel like we've hit a bottom. This looks... What am I supposed to do with this? I don't know. I can't do anything with that. I can't do anything with what's over here. I don't know what to do with that. And right now, sure, it can have upside objectives, but look how weak it is, bro. Look at that. This is like SpongeBob and Patrick when they went to the gym. And they're surrounded by Larry the Lobster and all these buff guys. And then, you know, here they are, just weak. That's what Swiss franc looks like. Have we set a bottom? It doesn't look like it. We just hit the 88 level, but I wouldn't long this, bro. I wouldn't long this right now. But yeah, 15-minute, this is doo-doo. I mean, if you want to take a trade and not be in the profit very quickly, then I think you should trade Swiss franc. More like Patrick without water in Sandy's crib. Yeah. That's me when I tell you guys I'm not going to trade. I'm like, yeah, I'm not going to trade today. And then I see a setup and I'm like, I need it. So I got to stop doing that. But all right. I really don't have strong expectations for the PM session today. I don't know what's going to happen. If the S&P was under accumulation this morning, I think the final target for today could be 45.75. That's only 9 points away, 8.5 points away. I think that could be likely. I just don't like anything that's in here at the moment on a 5-minute time frame. This looks terrible. The 15-minute just looks, I don't know, just terrible. Like, have you ever taken a trash bag to the trash and the bottom fell out and half the trash fell on the floor And you just look back and you're like, bro, that's what this is here to me. Like, all the Thanksgiving shit that you're throwing away now, all the leftovers that you didn't finish is getting tossed out, and like the bag just falls out. The bottom just falls out and just gets on the driveway. And it's just not a good scene. It's just not good. And so I'm just going to walk away. I mean, I'll update you later if we get to either one of these levels, but I don't have a high conviction either way. If it goes higher, it goes higher, but I'm done for today. Oh yeah, Edgar, you can always take a trade on paper, bro. Matter of fact, you could paper long ES if you want to. Even on paper, I'm not going to. But yeah, that'll be it for today. Very last thing, the absolutely last thing. We're not going to have 10 of them tonight or today. I posted my mailing address again on my Instagram. If you would like to send me a letter, I'm going to go pick up the letters on Friday of next week. So if the trade house has ever given you some value, if I've ever given you some value at any point the last, I don't know, 6 years, just let me know. Just let me know. It's a good way to practice gratitude. It's a good way to bring back handwritten letters, because as a society, we have gotten rid of those because of texts and emails and Skype and YouTube. So I feel like bringing that back a little bit is pretty solid. So that would be it, family. Y'all be good. I'll see you tomorrow. Same time, same place, right here on YouTube as we close out the last week of November. And then we'll be in December on Friday. So that'll be great. And then we're going to roll into 2024 pretty soon. So y'all be good, man. I'll see you tomorrow.